So I shall begin with a joyous hello to all of my good friends out there occupying the nation of fortune and the betterment of oneself. Welcome to another weekly edition of Stock Market Mutterings. Doug here with Trade with Doug. And before we get started with today's video, I encourage all of you that if you are not happy with your trading, if you are not consistent, if this market right now, this stretched out long-term bear market is kicking your ass and you're about ready to walk out the door, don't. I encourage you to go to tradewithdoug.com, click on the private community tab, and trade with me. Because my job every day is to get traders to become consistent, to train them for a lifetime of success in the stock market. Not 1 year, not two, but for the rest of your life. And that's what we want to think about, guys, is that big picture. So make sure you check that out there. We're going to start with today's video, and again, before I do that, let me remind you of something that I said last week. And here's what I said. So having said that, we don't know where the bottom is, but I'm going to say that maybe this week we begin to see a rally only based off of a few things. Again, so we did get this rally. And there was a couple of reasons there. I didn't play the whole video, but just to kind of go over that real quick. There's a couple of reasons I thought we were at that time for a squeeze, if nothing else, in the market. And one of those is we never had as much short interest in a while in the market as we did. All the news was negative that was coming out. And the overall theme across the board was just bearish. And that's how this works out, guys. Again, I'm not special here in what I'm doing. All I really have is experience. And when I do these videos, I want to take that experience and pass it on to you, because for a lot of you that are listening, I was just like you when I started. When I started out 25 years ago trading, I bought every .com. I chased everything. I thought there would never be bear markets. And over these years, living through the .com crisis, living through the financial crisis, and understanding how markets go through cycles, has just given me information to share with you guys. And I hope, if nothing else, I kept you from losing a ton. I mean, you didn't make a lot of money in this decline, but maybe, you didn't lose so much. If you did, don't worry about it. Tomorrow is a new day, and next week is a new week. The market will always give you a rematch and allow you to right your wrongs. So think about that as you listen to what I say throughout this video. So that was kind of expected. If you caught it, great, good for you. If you didn't, don't worry about it. Again, next week is a new week. Where do we go from here? Because that's what's important. What happened last week is in the past. We're now entering one of the most bullish times of the year. The 4th of July week has historically been the most bullish time again. Go figure, right? And this is something that you guys need to understand. Markets are 100% emotionally driven. And unfortunately, most of the people that are investing and trading are running completely off of emotion. That's why these reversal tactics work. That's why we saw what we saw last week. Because when everybody is bearish, unfortunately, the herd is wrong. When everyone gets short, it's too late. Because they were buying at the top and were probably shorting towards the bottom. Now, I don't think this is the bottom, but again, I think you understand what I'm saying. I think we can see a small continuation of this rally. I don't know if we're going to have enough to move. I don't believe we're going to have enough to move past 4,100 to 4,200. I think that would be the tops here in the short term. I still don't think that we have seen the true bottom yet in this market. And the reason for that is much of the problems we have are not being fixed. And you got to think of where we were in this unique time in history. There's never been so much free money, so much easy money to get your hands on, so much growth for companies, for them to borrow such cheap money. It created real estate bubbles, it created stock bubbles, it created NFT and coin bubbles and all that other stuff. Now we're reversing course and going through the strongest tightening, the removal of credit from the economy, and that's going to hurt it because that's going to hinder how companies grow. Example, your first big name, Netflix, announcing this week about layoffs. You're now starting to see it bleed into the economy, and I think you're going to see in the next couple of reports higher unemployment. You're going to continue to see things that point us to we are in fact in a recession, and we may enter a spot of stagflation where prices remain high on the goods that we buy. So I don't think the worst is behind us. But as a trader, we're just doing it 1 week or 1 day at a time. So if we do start to see some strength in there, I think there's some nice moves that can be. And because it's that time of the year and there hasn't been a whole lot to be positive about, perhaps Merck and the 4th of July is a good time to see us move up there. I think that's the top. Now we could sell off and make a new low, and I think that's going to happen. If not this week, it happens sometime after the holiday. But again, we'll assess that next week. For this week, let's talk about some trades. That's how I'm seeing the market. Don't fall in love with it, because I don't think the bottom is in. Now, many of these stocks that were those growth stocks, the ones that borrowed the money, the ones that got overinflated, and the rest of them, had just absolutely been beaten to pieces. And this has gone on since pretty much November. I want to take a look at SPOT here because I like the way this chart looks. And if we continue, in order for me to do this one as well, I need to see something with the market too, that the market is behaving itself or at least remaining somewhat structured. This is a nice close here on Friday. Very nice range break on the daily. I think there's room up here to about 115 to 117, and right now you're around the 107s, 108s. So there's some cash flow trade right there to the upside for a couple of days swing. Again, the market needs to cooperate here. All bets could be off if something comes up and we start to see some heavy washouts in the market. But as long as the dips are getting bought and there's some decent structure and a little less volatility, I think this one will grind its way back up, much like Roku has. Again, don't fall in love with this. This is not an investment. We're not going back to 305, okay? Just one step at a time. I like this spot possibly here for long. Also, Airbnb, and you're going to probably find a lot of these stocks in your portfolio on your watch list that look pretty good. Same thing, not quite as tight of a structure down here or a tighter consolidation as you had with SPOT, but still the same type of setup. You are ready to make a range break, and if we do break up above this top range here, which is like 100, what is this, not MAC, I don't know, 106, 107, I got to squint, I got this, the recorder's cutting off the actual price, so deeply apologize, 103.80s. Then there's some moves up in here a little bit. Excuse me, let me get those numbers right for you because I'm just spatting off here. Okay, 123 break for a trade up into 125s, 126s. Again, next range up there. This one isn't so bad either. Again, it's going to have to do a lot like SPOT, match the market. So there's a couple of longs there that look relatively decent. I can even throw some NVIDIA in there for you. Looks pretty good too. All of them. You're going to see more than just what I'm giving you. But whatever you do, don't chase them into morning strength. If everybody wakes up and starts buying first thing, don't be that trader, because I think you're going to regret that you did that, or you'll be able to get a better price. Now, for you cheap stock traders out there that like the lower prices, this AERC getting my interest here possibly as opening up a swing short on this one. I've done some day trading short on that, but that's a different kind of strategy and setup than I'm talking about today. But you get a nice reversal here on Friday. It looked like it was going to be one of those stocks that turned around and started ripping back up like a Veru or a Sega. But it didn't do that. Actually got a really nice tall wick here selling off. I think if you start to see closes here underneath of the 10s, this is, at some point, I think that gives it all back. I'm not going to tell you this is a great company and the bottom is in it. It's going to end up going back at some point down into the 2s or 3s. But if you get a nice close under here, that could mean this momentum in this name is over with. So watch this AERC as a short. Same way with this STKL. STKL. Yeah. This one here looked like it was going to break out. You got into that resistance and now rejecting. Again, a really strong wick coming off of the tops there. I like this one to open up a swing short on this one. And then this MNSO, I'm going to throw this one in here, a couple of cheap ones we have. Maybe start looking at this one as a potential short somewhere up here towards the 10s if possible. Got into the 9s there early. Maybe a little bit more parabolic. It doesn't look like it's quite ready yet, but it's just something to watch as we go throughout the week. Regardless of what you do, whether you're going long or short or whatever your methods are, I think we're still in the same theme. If you're going to buy something, I think there's opportunities for short-term squeezes. But keep that in mind, short-term, that if you do get a move in your favor, you're obligated to either cut your risk immediately on that trade or take some profit. This thing can turn at any minute now. We're not, the worst is not behind us. We're not out of the woods yet. You will see other sell-offs. And at this point, don't be that person who's trying to get the exact bottom. Bottoms will take time to sink in at these levels. If you're short selling, still be careful with that too. Just because something goes up and gets very parabolic in the morning doesn't mean it's a short just because the market's bearish. But bear market squeezes are rough. I mean, look, like I said before, since this started in January, we've had 3 different times this market has squeezed in excess of 8%. So we've had 8 to 10% moves in a matter of 2 weeks. That's like a whole year. Like when I started trading, like a 10% in a year was like a big time move. Now you're seeing that in 2 weeks. So don't be greedy with those shorts. The market doesn't have to do anything. It completely operates on its own merits. So we can go up into that 4,200. Maybe we have made a low. More data needs to come out. We don't have to have a flush or big old panic sell-off day or capitulation day to mark a bottom. It doesn't have to follow any script from the past. Just use your charts, use your price action, and if you don't know how to do that and you want to learn, you visit me. It's pretty simple. So guys, thanks a lot for watching this video. Take care, trade well. I'll talk to you soon.